I'm Dave Gentry. Welcome to the Red Chip Money Report, where we help investors find the best names in emerging growth stocks. For 20 years, we've been in the business of discovering tomorrow's blue chips today. Did you know that Red Chip was the first company to put independent research coverage on Starbucks in 1992 at $6.50? Did you know we were the first to put research coverage on a company called Zagg, maker of the invisible shield for cell phones? It was 73 cents in 2008 before it was listed on the NASDAQ when we issued our research. The stock reached a high of $16.62 in 2011, representing a 2,200% return for investors who were smart enough to invest when the company was generating less than $20 million in revenue and still losing money. I personally interview hundreds of CEOs of emerging growth companies every year. Our analysts spend their days looking for companies that meet the Red Chip standard. And over the last 20 years, we've selected hundreds of stocks that have outperformed the market by wide margins. Today, you'll watch interviews with the CEOs of 3 smaller cap public companies, companies that have not yet shown up on the radar screen of most institutional investors, which is exactly when you want to buy, before the big boys get into the stocks, build their large positions, and ultimately help propel the stock upward. Again, our analysts are on the hunt every day for these special, undiscovered situations that can help you make thousands, hundreds of thousands, and ultimately millions in the market. In just a few moments, you'll see interviews from a stem cell biotech company listed on the New York Stock Exchange, whose CEO is a leading authority in a field that will revolutionize healthcare, a company in the nuclear energy space on the cusp of reaching some major corporate milestones, and finally, a Florida-based company whose product was ranked by the Wall Street Journal as the top manufacturing technology globally in 2012. Later in the show, we'll also look at a book called Think and Grow Rich. You've probably heard of it. It's a classic in the field of inspirational literature. And let me note here something you probably already know. Smaller cap stocks are, by their very nature, the most volatile stocks in the market. Historically, though, they offer the opportunities for the biggest percentage gains. Gains of 50%, 100%, 500%, in some cases 1,000% or more. You know, America is a land of entrepreneurs. It's a land of innovators. We're still the largest economy in the world. And Red Chip is now focused on U.S. companies, U.S. entrepreneurs, U.S. leaders, men and women running small public companies like those you will meet today. Smart, disciplined, and working hard to maximize shareholder value and grow their companies. You know, Red Chip was ranked as one of the fastest growing private companies in America by Inc. magazine. Today, we're going to look at some of the fastest growing public companies in America. Now let's go to an interview with Seth Grae, the CEO of Lightbridge Technologies, symbol LTBR, on the NASDAQ, a company operating in the field of nuclear energy. Lightbridge develops nuclear fuel technology and also provides nuclear power consulting and strategic advisory services for governments worldwide. Here with Seth Grae, the CEO of Lightbridge Technology. Seth, you're in the nuclear fuel, nuclear energy technology space. You are servicing, through your consulting business and through your fuel technology, both existing power plants here in the U.S., but also those being built around the world. There's about 70 being built all over the world today. Tell us about your business model.
Well, basically, the business model is built on providing consulting services now to companies and countries deploying reactors for the first time to bring in the revenue that we use to develop the nuclear fuel technology that will be licensed into the industry and will generate tremendous returns for our investors. We see the nuclear industry really falling into 2 segments around the world. There are countries that have mature nuclear markets like the United States, France, South Korea, that will build very few new reactors. They're mostly about maintaining very old reactors, and they need to improve the economics of old reactors. And our fuel will do that. And then there are countries like the BRICS and Saudi Arabia and other countries that either have no reactors or very few reactors that are building very large numbers of reactors. 70 are under construction as we speak. And when you're building a new reactor, being able to get more power, meaning better use of that capital cost, makes the whole system work better. Lightbridge's fuel will uprate a new build reactor by 30%. So you could build 3 reactors and get the power of 4. So this will be a tremendous advantage for countries deploying many reactors.
In December, there were two articles that appeared on your company. One in a peer-reviewed journal that talked about the fuel technology that you've developed. The other talked about the economics of this technology. Tell us about the significance of those 2 articles.
Well, taken together, those 2 articles that were published in December really go a long way to validate both the technology and the economics of our nuclear fuel. The peer-reviewed journal in Nuclear Technology Journal, published by the American Nuclear Society, validates the technology. It's the first of what we see as many validations coming, but this is a very significant one, validating the safety and economic performance and the metal fuel technology that's at the heart of our nuclear fuel rod design. And then Siemens, through its wholly owned subsidiary Pace Global, issued this study of the economics of our nuclear fuel technology, showing the economic benefit to the reactors that switch to our fuel, which for existing reactors switching to our fuel to increase their power output by 10% is about a $60 million per year benefit to the plant, resulting in about a $6 million per year per plant royalty to Lightbridge.
Well, you mentioned $6 million in royalty to Lightbridge. Investors care about revenues. You're trailing roughly $3 million in revenue now, down from $22 million pre-Fukushima. And of course, that affected your business. What can investors expect in 2013 in terms of revenue, new contracts, and the development of this fuel technology?
Certainly keeping the current clients, but adding new clients in different places in the world that are hiring Lightbridge to help them deploy nuclear reactors. And on the nuclear fuel side, you'll see the fuel be made for the tests in the US and Russian reactors. You'll see the fuel put into those reactors and actually start. And you'll see some partnerings with governments and large commercial enterprises working with us to do that, because we're about a lot more than just designing a nuclear fuel technology. We're about creating the infrastructure to get it deployed and used commercially globally, and you'll see a lot of that during 2013.
Multi-billion-dollar market opportunity, a cutting-edge technology, world-class scientific team, world-class board of advisors. Stock trades at $1.80 today. What happens when you generate new contracts, more revenue, and your fuel technology continues to be validated? I think investors could expect some fairly significant upside. Thanks for being with us today.
My pleasure, Dave. Thank you.
My value proposition on Lightbridge, well, look at the chart on this stock. Prior to the Fukushima meltdown in Japan, you remember the great earthquake in 2011, the stock was trading well, trading between $5 and $6. The earthquake hit. By the way, I was there that day on the 17th floor of the Marriott Hotel in my room at about 2 p.m. when I felt the building shake. And actually, the building was swaying back and forth like a pendulum, and I was scared. I grabbed my wallet and phone, and I headed down the stairs, and it was a very long walk down. But things changed for Lightbridge that day. The stock, as I said, traded for most of 2010 and the first quarter of 2011 at between $5 and $6. After the earthquake on that fateful day of March 11th, 2011, the stock begins a long, steady decline, falling off a cliff until now it's trading below $2. Now, the stock was knocked out. The company did not renew contracts. It did not get contracts they would have received if the meltdown had not occurred. But now things have changed. Nuclear power plants are not going away. There are 66 nuclear plants currently under construction in the world, and all can benefit from Lightbridge's technology. I like this stock at current price levels. Could it reach its pre-Fukushima highs? I think so. They have plenty of cash to fund operations. We should see new contracts and the fulfillment of old contracts in 2013. The value proposition makes a lot of sense. You buy the stock that's been beaten up, whose market opportunity is still strong, which has cash to execute and a great technology or service. And Lightbridge meets all of those criteria. It should be just a matter of time before this stock recovers and starts trending up. But you need to be in the stock now. Our next company, Abicon, is on the OTCQB. not yet listed, but has filed an application with NASDAQ. Now, this company capitalizes on advancements in nanotechnology in order to create next-generation metallic coatings and cladding solutions that improve metal resistance to corrosion and wear. In October 2012, their coating called Cermaclad was ranked the top manufacturing technology globally by the Wall Street Journal. Now let's go to an interview with Robert Miller, the CEO.
Please give us a brief overview of the organization.
Abacan Inc. is a nanotechnology company that designs, develops, manufactures, and markets nanocomposite materials that are used for protecting metal from wear and corrosion, heat, for 4 multi-billion-dollar markets. And we also do metal formulations for other high-tech applications.
So Petrobras, if I'm not mistaken, has made an investment into your organization, into Mesocoat, for the R&D, if you will, with regard to cladding for treatment of pipes that are used within distribution or transportation of oil products and alike.
Okay, yeah. Petrobras has one of the biggest offshore fields. It's at depth, which causes a problem for the pipe, and it's also coming through a salt dome, which creates sulfides, which are corrosive. Petrobras' needs are gigantic. Petrobras also has been mandated by the government, which owns 51% of Petrobras, the 5th biggest energy company in the world, to stay at the top end of technology by investing in technologies. We hope very soon to have finished our phase 2, which phase 3 is building a plant in Brazil, but phase 2 is where our coatings are of commercial quality, tested by third-party independent labs. So earlier they tested our coatings at a various stage with Det Norsk Veritas, the biggest lab company for the oil and gas industry. And we passed with flying colors, where our corrosion rate was 1/6 of our competitors, as just one of the criteria. The industry does not like what they're currently using, and they're spending billions a year, like Exxon, all those 4 majors I meant are spending more than a couple $100 million a year on coatings with these high-end coatings. We're doing it differently. They're welding from a pool, so just a spool of nickel, they weld it onto the pipe so it has a metallurgical bond, which is the highest end of coatings. We're atomizing the nickel into powder, and then we're adding 3 things, comprising about 0.75% of the overall material is things we've added, like dispersants, binders, and bonders. Those things are making our product, with our application system, work much better so that the bond strength is stronger, the corrosion rate is lower, the inspectability is easier. With our product lines, we've been talking about oil and gas for corrosion prevention. We have 3 other products that sell into multi-billion-dollar industries that are totally different. So we have wear resistance for mining and oil sands mining. That's just as big a market. Our profit margins aren't quite as good, but it's very big annual business. They're recoating these pipes every year. Whereas in oil and gas, it's for the life of the field, if they can, and ours would.
What percentage of the market do you hope to capture with your, and the realistic percentage of the market do you hope to capture in any one of these different divisions?
I would say a couple of things. If a major had our technology, they would win a huge percentage of the market very quickly. We're a small company, so we have to earn our stripes. We have to survive performance bonds, not for the quality of the coatings, but for the delivery. All I could say is if we got 10% of the market, our shareholders would be really happy. But that's just one market, and it's not the biggest.
Now, why do I like Abacan? Their award-winning technology has widespread applications across multiple industries. The market opportunity is huge. The company recently received funding to build a prototype plant to produce their patented protective coatings. Now, a company can have a great technology, but without funding to help commercialize the product, all you have is a good technology. This company is quite capable of getting more funding to continue to build its plants. It has contracts with some of the biggest oil companies in the world. If this company can produce a contract with a major buyer, the stock should trade significantly higher, and I believe they can because they have contracts now with major manufacturers. All they have to do is get the product ready for market. Now remember, smaller cap companies tend to move on concrete news, and while the revenues of this company are small today, we expect revenue to grow substantially over the next 2 years. And while the stock could fluctuate in the short term, we are betting on the long term with Avicon. This is a buy and hold stock. Think, execute, and grow rich, Mr. Miller, and we'll follow you. You know, one of my favorite inspirational books is Think and Grow Rich by Napoleon Hill. This is the greatest book, in my opinion, ever written on how to accumulate riches. It's a classic, having sold 15 million copies. First published in 1937 by a man that was commissioned by Andrew Carnegie, the steel and railroad magnate, who was one of the richest men of his time, commissioned Napoleon Hill to study the lives of 500 of the most successful businessmen of his time. And the product was this book, which is a scientific study, a step-by-step guide to getting rich. It is, in my opinion, again, the all-time greatest motivational book ever written. And every motivational book that has followed is a mere echo of this classic. And here are some of the basic principles he discusses in the book required to become wealthy or increase your riches. One, you must have a desire to be rich. You must have faith, going back to controlling your thoughts, believing the right things, telling yourself the right things. Specialized knowledge in the field that you're preparing to grow rich in. Organized planning, the ability to make decisions, the ability to take risk, and persistence. Persistence, as we heard many years ago by Franklin Roosevelt, is overwhelmingly, it is the only principle that is overwhelmingly powerful. And he talks about the importance of the power of a mastermind, being around people smarter than yourself that can help you grow and develop your vision. Think and Grow Rich, Napoleon Hill. I strongly recommend it if you haven't read it. I started picking it up again and reading it just a few weeks ago. I've read it 4 or 5 times over my lifetime. And now our next company, headed by Robin Smith, the CEO, a highly educated woman, persistent, hardworking, and one of the leading authorities on stem cell therapy. And NeoStem is a cell therapy company capitalizing on the paradigm shift that is occurring in medicine. In the future, cell therapy will play a significant role in the fight against chronic disease and in lessening the economic burden that these diseases pose to modern society. Now, let's go to Robin. I'm here with Robin Smith, the CEO of NeoStem. Robin, thanks for being with us today here in our studio in Orlando.
Thanks for having me.
Now, you are the CEO of one of the leading stem cell technology companies in the world today. In fact, you have a book coming out on stem cells. Tell us about your company.
It's an exciting time. There's a paradigm shift in medicine using the cells of our body to treat diseases. And we've acquired the assets over the last 5 years to really be a leader, both from creating our own novel cell therapies to having a contract manufacturing business which generates revenues and helps other companies create cell therapy products.
In fact, you manufactured the drug for Dendreon, the cell therapy that treats cancer.
We helped them get approved. We did about 80% of their phase 3 trial that got them approved by the FDA to create these dendritic vaccines for prostate cancer.
And talk to us about your intellectual portfolio.
So we're also developing our own cell therapy products, and we believe it's critical that if you develop a product, you should have a very strong IP portfolio, which we have. And as you may have seen, we had another patent approved in the United States, both method and composition of matter, so that at the end, when the therapy continues to evolve and hopefully be approved, we'll have a protection using our intellectual property.
And that particular patent is around this phase 2 clinical trial therapy that's now in process.
That's correct. We bought Amercyte, which has AMR-001, which is a way to take stem cells of your own body to treat a person after they've had a heart attack to help lay down new blood vessels to prevent the worsening of heart muscle function.
So your technology will save healthcare costs and help people live longer.
It's very encouraging. That's what we're seeing. It's not just about prolonging life, but it's about making people's quality of life better because you're restoring damaged tissue. And it's an exciting time now in medicine.
Now, stem cell technology, it's been around for many, many years. There's been a lot of debate. Should we use embryonic cells, adult stem cells? Again, you're coming out with a book that's approved by the Vatican. Talk to us about this debate and your position.
Yeah, so people don't realize a bone marrow transplant, which has been used for 30 years for part of cancer therapy, is a stem cell. And so now what we're realizing is there's a lot of advances, many clinical trials, 4,500, 22,000 cell therapy trials that are looking to take the cells of our body to create therapies. And people don't understand that. People are walking who have been part of the clinical trials, whose lives have been changed. And the idea of the book is to help educate people on the advances of adult stem cells, to have them understand they don't have to choose between science and faith. And this is something that is endorsed by the church, and it's something they shouldn't be afraid of. And there's hope for the future of the many, many millions of people around the world who are suffering from debilitating diseases.
And NeoStem's at the forefront of this paradigm shift in healthcare. In fact, you've received grants from the National Institutes of Health, from the Department of Defense. Tell us about these grants, what you're working on for these institutions.
So we have a technology, it's a little earlier in development, called V-cells, and we have grants to help bring these into the clinic and to advance them using these V-cells to help restore tissue that gets damaged, take bone, recreate bone with osteoporosis or damage, use Envision for areas like macular degeneration or retinal disease, and it's a way to restore damaged tissue using the cells of our body. So while it's early, we're very excited about the technology and having the funds to help advance it.
Well, a few things I like about your company. One, very, very strong scientific team, very strong management team. You have a medical degree from Yale. You also have an MBA from Wharton. Doesn't come any better than that. You have grants from major healthcare institutions in the world. You have a phase 2 clinical trial. You're generating revenue through your contract manufacturing business. Stock's trading at 60 cents. You're fully funded at this point. I think it's a very, very strong buy. What are some of the catalysts coming up that could possibly propel this stock higher?
Well, you know, we're enrolling our patients in the trial, and we should complete this year with data readout 6 months after the last patient is enrolled. We continue to add new clients to the PCT business, and as the field emerges, we're right in the center of that. We should be having some data and maybe additional grants for our V-cell technology, and of course a lot of exposure with the book that's coming out in April, and then the Vatican Conference a week later.
So a lot of short-term catalysts and long-term catalysts. You want to be in these biotechs before the big news hits to maximize your profits. Robin, thanks for being with us today. We'll have you back soon.
Thank you.
My value proposition for NeoStem. Not a profitable company yet, but the potential upside for investors is enormous, particularly at current price levels. The key here is, can the company deliver on its technology? If they are successful in getting their technology to market, the stock will not trade in the 60 to 70 cent range. This stock could trade at 10 times that price. Now, Robin Smith and her team, they are a world-class management team. They are a world-class scientific team. They are one of the leaders in cell therapy. The stock, biotech stock in particular, tend to move on concrete news. You want to be in a position, you want to own that stock before the concrete news comes to market. You know, there's an adage about buying small caps. It's best to buy them in bunches. Having a diversity of smaller caps in your portfolio will help balance the returns. It's not a good idea to put all your money in one stock, whether you're buying mid caps, big caps, micro caps, or small caps. And remember, no one is right all the time. Not RedChip, not the best fund managers and analysts in the world. But RedChip, we have learned from our successes and our failures over the last 20 years. And there are certain principles that, when applied systematically, can help yield large returns. It's not easy finding undervalued, undiscovered companies with the capacity to deliver returns of 50%, 100%, 2,000%. And this is not a get-rich scheme buying the smaller cap companies. You should have a balanced portfolio of stocks, larger cap, blue chip stocks paying dividends, balanced by mid-cap stocks, and the smaller cap emerging growth companies. There's one factor that we can count on, and that is the capacity for human error. Even the best CEOs make mistakes. Even the smartest men on Wall Street make mistakes. So the first thing that we look at any company is the management team. Is the team focused? Is it disciplined? Do we have a history of execution? Do we have industry experience? Secondly, is there a large market opportunity for the product or service? All the companies you looked at today have very large market opportunities. Lightbridge is a nuclear energy company with a growing consulting business and government contracts operating in the global nuclear technology market. In that market, the U.S. Commerce Department estimates will reach $740 billion over the next decade. Lightbridge, again, I believe, is a good buy today at current levels. Abacon, which is a RedChip client company in which we own 50,000 restricted shares in payment for our services, is a technology company addressing a multi-billion-dollar market in the metallic coating business. Contracts with Petrobras, one of the largest oil producers in the world. Again, this company, small revenues, but big upside if they can deliver on just one of those contracts. Neostem, also a RedChip client, a company with a world-class management team and scientific team, very strong intellectual property, an emerging leader in cell therapy. The stock is cheap by any measure. Give us a call today at 1-800-REDCHIP and order a free due diligence package or a research profile on any of these companies. Visit our website, redchip.com. You can watch full presentations by these CEOs. And sign up for the RedChip Money Report, our weekly newsletter, to learn more about small cap stocks. You can also follow us on Twitter at RedChip Nation or email us today at money@redchip.com and request more information on the companies presented today. And come back next week, same time, same place here at Fox, to learn more about the best emerging growth companies in the market today. And if you have a company that wishes to go public, raise capital, call us or email us to learn more about RedChip's easy, inexpensive process for taking your company public and raising money. Thank you, and we'll see you next week. I'm Dave Gentry, the RedChip Money Report.